Don't claim any of these items on your self-assessment tax return if you are self-employed and you do not want a HMRC investigation. If they investigate you and find any of these items in your return, then you're going to be in trouble. So I'm going to show you the disallowable items, and then I'm going to give you an idea of an allowable item, which would be in a similar category, to make sure you're not missing anything, but also you're not going to get yourself in trouble. So let's have a look. First up, our own salary and national insurance contributions. Now, I feel like this one can be a little bit confusing because, of course, when we have a limited company and we are employed by that limited company, then our salary is tax deductible for corporation tax purposes. Of course, we do pay personal income tax on that salary. However, when we are self-employed, we are, of course, in our self-assessment tax return, calculating our total taxable profits to be assessed on us personally. So if we were deducting our salary and national insurance contributions, then we could technically have no tax payable at all. So of course you can't deduct it. If you were to employ somebody to help you out, maybe you were employing somebody 1 or 2 days a week just to help you out doing a few little bits in your business, then that employee's salary, bonus, national insurance contributions would all be deductible for tax purposes from your profits. Next up, we have entertaining costs. So that would include client gifts. Maybe you give out some gifts at Christmas, taking clients out for food and drinks. Now, I often have arguments about this one because people sometimes say to me, well, that's just how we do business. Like, business is done over dinner. So why is that not allowable? Client entertaining, never allowable. So unfortunately, we have to knock that one back. But something that is allowable would be your own meals if you are working away. So say you were attending a trade show that was hours away from your house and you were staying overnight, then your meals would be an allowable tax deductible expense. You couldn't claim them for a client who was maybe joining you for that meal. Depreciation. I'm going to assume in this example we're using the traditional accounting method. Now, if anyone wants me to do a comparison between cash accounting and traditional accounting, that's fine, happy to do that, but let me know. Depreciation. Now, for people who maybe haven't come across this before, this is where, say I bought an asset for £4,000. So say it was a computer, £4,000. It's going to last me 4 years. So depreciation every year would be £1,000. So over the 4 years, it would be completely depreciated and have no value. Don't allow depreciation because instead, when we're using traditional accounting, we are allowed capital allowances. Now, capital allowances would mean that in the first year when I bought that £4,000 computer, I would have a £4,000 tax deduction. So I can't have my depreciation because I've already had the tax deduction and I can't take it twice. If you're using cash accounting, it's different because we don't have capital allowances. You just get the deduction as a normal expense deduction. It's just a little bit different, but again, you're not missing out on any tax deduction. Losses on disposal of assets, so that's assets only. Home renovations. Now, I think the issue here is people think if they work from home, then this is their home office, they can do whatever they want, they can make any change, and it's all tax deductible. Not true. If you have made a change to your home, it has no relation to your business. Maybe you've had your house painted or your loft converted, something like that. You can't have that as a tax deductible expense. What you could have, though, if you work from home, is a tax deductible expense in relation to the amount of the utilities that you use in your home. So costs could include electric, council tax, mortgage interest, rent, internet. Now, I have a whole video that goes into the different calculations you can do for this. I'll link it below so you can check it out. So I'm not going to dwell on that one too much. If that's a big hassle, there's also a simplified expense method that you can use. So basically, if you're working from home quite a substantial amount, you can claim a tax deduction. And just to remind everybody, when we are taking tax deductible expenses, they should be wholly and exclusively for business purposes. So we can't have anything that is just for our own private use. If we bought an item that had an element of private use and an element of business use, then we can still claim a percentage of that item. So say I used an item 30% for business use and 70% for private use, well, I could still claim a 30% cost in my tax computation. So again, just depending on what you're buying, have a think about it, make sure you're not missing anything. I'm thinking here particularly like phones, computers, anything like that that you do your business bits on as well, then you should be claiming some type of tax deduction on them.